It's time for the business news now with Nicholas Poynton. Nicholas, let's start with the Financial Markets Authority. It's given some kind of heads up about investing in the derivatives market. Before we get to that, let's have the 101 lesson in what the derivatives market is, eh?
All right, so I'll try and put this as simply as possible because derivatives are a really complex financial instrument that people can invest in. They're at the most speculative end of the market. So there are three main types: futures, options and swaps. And they allow investors to do a variety of things. They can lock in prices, they can hedge against the risk of their own investments. You can even speculate on the value of an asset you don't even own. So it all sounds pretty bonkers, but a really simple example is a currency option. So just imagine you're an importer, you love it when the New Zealand dollar is strong against the US currency because it means you can get more for your buck. And let's say that the New Zealand dollar is at about 66 US cents. So you may think that, it may go lower than that. So what you can actually do is that you can pay for the option to set your dollar at 66 US cents so you can continue to import goods at the same price. So, derivatives, you can do some pretty cool and crazy stuff with them, but they are risky. For one, they're really hard to value, and that's because they're quite hard to understand. And this is one reason why the FMA is saying that they're not really suitable for everyday investors like maybe yourself and myself. And they've just conducted a survey where they actually surveyed a bunch of derivatives issuers around the country, and they got them to do a little bit of a self-assessment, talk us through what you do, how you interact with customers. And it did raise some concerns for the FMA. Chief among them was how they actually deal with vulnerable customers. So this is to do with how much vetting are they actually doing when someone's becomes interested in derivatives? Are they sure that people have a high level of financial literacy? Are they sure that the people who are coming to them actually know what a derivative is? So
when they say vulnerable customer, are they meaning is the person well informed or not, or are they talking about some other kinds of vulnerabilities as well?
Well, that's the first part, and also do they do checks on people? Does this person maybe have a history of gambling addiction and things like that?
Gotcha.
So there's a raft of tests that a company can do to make sure that customers know what they're getting into, because they can expose themselves to some astounding losses. So the FMA is going to take this data that they've collected from the survey, and it's going to guide their monitoring of the sector because they want to keep an eye on it going forward.
Right, okay. So let's move on. So despite a big bump in hotel activity, the outlook isn't bright, and the industry expects that the government will have to step in and support them. Well, that's interesting, because isn't the government already supporting them through isolation and quarantine? Yeah, well, so
you raise a good point. So this comes out of a report done by the commercial property company Colliers, and they say there was, a surprising bump in activity over the last month. Part of that is because, we moved to level 1. There was a lot of pent-up demand. People were going around the country. They were staying in hotels, school holidays, business travel, the like. But the main driver has been the increased demand for managed isolation facilities. And currently there are about 6,000 rooms being used across 29 hotels in the country's 4 main centres. And this is good for the centres, but not really good in the regions where you have a lot of small hotels that don't really meet the requirements that the government's looking for.
And then there are some towns that just don't want it.
Well, yeah, as we've heard in the news. So, which is why Colliers is saying that the future is not looking too bright for the sector. They say that until international travellers return, operating levels at the moment they're not economically viable. They've agreed to these terms with the government where they're charging special rates, but I spoke to Colliers today and they said they're making really slim margins, and this is for the off season and the winter and things like that. So, and also revenues at the moment for a lot of the hotels have actually plummeted on a per room basis. I think Wellington, the average price they're getting per room has fallen by 28%.
Are they suggesting what form of support they would like? Because obviously there's also the wage subsidy until the beginning of September as well. So are they talking about a continuation of that or something totally different?
Well, this is where we probably could get some more detail, but they're saying that things could get worse when the wage subsidy rolls off. And this is why they think that the government may have to step in with its own maybe, industry-specific stimulus package for the hotels to keep them going until the international travellers arrive.
Yep, and who knows when that is going to be.
Exactly.
Okay, so let's do a whip around on the markets. What was happening today?
So the NZX top 50 is down just under 0.5% by 57 points to 11,636. The New Zealand dollar is down to 66.2 US cents, steady at 93.5 Australian, and down a touch to 52 British pence. And if people are wanting more analysis and insight on all things business news, they can check out RNZ's 2 Cents Worth podcast, which is looking at the unexpected consequences of border closures.
Yeah, interesting. Thanks, Nicholas. That's Nicholas Poynton with Our Business this Friday.